What's good, guys? Welcome back to the weekly analysis. This will be the end of the week analysis, and I'm joined by a good friend of mine, Leo. Say what's up, Leo.
Hi.
So, as you guys already could tell, we're going through the weekly analysis, starting with the Forex calendar. We want to show you guys what news are there for the week, or as of right now, the end of the week of what we've been through, right? So we have Dixie, EU, crude oil, and the futures to go over, and we'll get started on the Dixie 1 hour. Right. So for Dixie 1 hour, right, our bias in the beginning of the week. If you guys haven't watched that video, you guys can go and watch it really quick. But if you guys don't want to, it's cool. Right. Just give you a quick recap. We wanted Dixie to go higher, targeting this buy side liquidity here. Right. However, we did say we want to see Dixie run lower to trade into a level of discount and then try to trade higher into the buy side resting above here from previous week high or previous day's high. But we saw Dixie go lower and then trade higher, go lower, trade higher, go lower, trade higher. When we really said, hey, this might be the low of the week here on Wednesday, right? And this should allow Dixie to really push up, try to get into buy side. However, as you guys can see with hindsight now, that price traded right into new week opening gaps high and then reversed from it, right? Creating that as the weekly high of the week, right? Price then trades lower, running sell side once more, right? And these labels here are the daily imbalance, right? This is a H4 inversion fair value gap, and we can see how price kind of trades into this daily imbalance and also the consequent encroachment of the daily imbalance, right? We see price trading around this area a lot, spending a lot of time here. Overall, in my opinion, I still think Dixie could reach for this buy side here resting, right? But as of right now, it's the end of the week. We'll just chill for now. We'll update the analysis next week. So make sure you guys pay attention for that. Is there anything else you want to add here, Leo, for them?
Not at the moment, no.
Okay, sounds good. Let's move on. So on EU, I did catch a trade for on the 15-minute for you guys, or not for you guys, but for myself. But I wanted to share this with you guys of a trade I caught on EU. So price did run higher on Wednesday, right? Price running higher. As you guys can see here, Wednesday price running lower, right? Taking out that low right there. EU doesn't really take out that high, but I'm looking at SMT here or Dixie taking out the low here, running higher, establishing this as a low of the day. Oh, my bad. And this should be the high of the day for EU, which I was looking for. So when price came up into it, I was comfortable shorting it here, right? Let's just say you missed this short or you weren't able to catch this short. You can look for this immediate rebalance right here. Price comes right back up into it. This could be your secondary short and your second short entry here. If that's too risky for you, that's okay. Price runs lower, takes out a short-term low. This is a low-hanging fruit that IC talks about. So this could be your trade if you wanted to, right? The draw for me was still down here. So when price retraces higher in New York, right? This could be your New York trade. Price trades right into the bearish order block and then tanks lower, right? Ultimately coming down into the sell side liquidity, right? And it closes around 10:45. So you do want to exit your trade around 11 o'clock, right? You don't want to hold it over 12 o'clock just because 12 o'clock is the lunchtime for them. So if I do recommend you guys closing around 10 to 11, that would be ideal, right? So don't try to overstay your welcome here. So if you even see this coming down into this candle here, you guys can just get out. Even if it takes out this low, you can just get out here, right? But this is a very, very solid 15-minute trade. This could be your trade of the week, and you guys can call it that week, call it week here, right? Moving on from EU, right? We have GBP/USD, right? As you can see, it's a little bit more different than EU, right? G looks like it's a lot more choppy, right? It's harder to trade, definitely. If you see GU here, price runs lower, runs higher, a lot of give and take, right? It gives you the low, it gives you runs lower, gives you the runs higher, gives you run lower, gives you run higher. So it's very, very difficult, and it makes it very difficult for someone to hold their position here. So in these type of market conditions, I do recommend you either sidelining it, or if you're really comfortable intraday trading it or scalping it, you guys could scalp this, right? In my opinion, you are able to scalp it. It's just you got to be very, very nimble. You got to be very, very careful where how much you're staying or how long you're staying and how much you're risking, right? Because like I said, if you're in a sell here, it can easily flip on you within 3 candles, right? So it's very, very difficult. It makes it very, very hard for a new trader to try trade in this condition here. So in my personal, I didn't really touch GU. I did catch a long on GU. I know that's a contrarian trade, but it was a scalp, so I was comfortable with that. But I did not overstay my welcome either. It was a very, very quick scalp, but I'm not going to cover it today just because, I want you guys to more focus on trading with Dixie, with your analysis of intermarket analysis with Dixie. All right. Is there anything else you want to add here for them, Leo?
Yeah, so we did see some targets get taken out. 121.223 sell side liquidity, and 121.54 sell side liquidity. It did trade into that daily BISI high and low level. It kind of the bodies I see are respecting this daily premium PD array. I mean discount PD array. Next week, I will be looking for sell side at 123.71 down below. However, it does raise suspicion that the daily imbalance on the higher end of the range hasn't been touched at all. So I might be watching for some high impact news to wick you into that. But that's no guarantee. My draw is still on the sell side.
Yeah, I definitely agree with you there, Leo. The sell should, I mean, the sell side here should still continue to be the draw, right? But there is a lot of buy side liquidity resting here. So I know there's a lot of news next week. I didn't really check yet. I'll update you guys on a new video with our analysis next week, right? But it could be very, very dangerous for GU because, like you said, Leo, there's still the CB here that hasn't been touched yet. And if price really wanted to, they can send this higher and then send it lower, or vice versa, send this lower and then have them run buy side here. So it's really it could be both sides of the market at the moment. So don't try to force you in the market, especially on GU. All right, let's move on from GU. We have crude oil. Take it away, Leo.
Yeah, so crude oil daily, piggybacking off my analysis on Monday and Wednesday. Monday I was initially bearish on crude oil. However, Wednesday I did was more 50-50 sidelined because I did see that wick into the premium level right there. And I was watching crude oil for more of a disrespect of respect of the premium level and trading lower, taking out the low highlighted with the red arrow on the bottom. Yes. However, trading into Thursday and Friday, we did not get that. We instead took out buy side liquidity at 88.97, that high of the bullish order block on the daily. And we traded a little higher into a daily bearish order block, which is highlighted in purple. That open level is highlighted on the chart for you. And there's also an imbalance, which isn't highlighted here at that bearish order block there, which Friday wicks into. So for me, order flow is pretty bullish at the moment as discount PD arrays are being respected and old highs are being traded into. However, we are approaching a premium relative to the whole dealing range, and we are around the 62 70.5 OTE levels. And going into next week, I will be watching what crude oil does at these levels, whether it takes out buy side liquidity at 90.58 or I reject trading lower.
Yeah, I definitely agree with you, Leo. I'm very surprised that price did get up here, but it is allowed for them to do that. They are allowed to keep trading into a level of premium until they have enough orders for them to go lower. I like that you brought up this inversion fair value gap here. I want you guys to kind of pay attention to this, right? It's very important because if price does get up above that inversion fair value gap and then trade higher and could use it as support for it to continue going higher, then we are no longer bearish on this, right? However, like you said, if this is a nice reaction from it, so if price continues dropping lower, we could see it as, okay, this is where the high is created, and we want to see it start running for these lows here, even trading into this gap here, in my opinion. All right. Yeah, you want to move on from the daily to the 4 hour?
We can talk about the 4 hour.
Yeah, go for it.
This is 4 hour crude oil. Highlighted in a bit more detail here, we have the dotted line, which is the bearish order block 4-hour, which price trades into. The bodies are respecting it on Friday's trading. We invalidated the old bearish order block in red there, as we trade higher into premium, taking out IC liquidity. I drew out the range equilibrium 50% there in black for you guys, just to show which levels are premium, which levels differentiate discount. As stated earlier, I will be watching crude oil next week, looking for reactions off of these premium pre-dated raise into discount levels. Some notable levels I'll be looking at are those lows made intra-week, yes, highlighted there. However, there is a big possibility that buy-side liquidity at 90.58 could be taken, and I'll be watching that daily inversion fair value gap for a reaction off of that. That's pretty much it for crude oil on the 4-hour.
Yeah. Let's see if what they can do to open. So far, in my opinion, this looks like this could continue to start going lower now, but we have to wait and see, right? It doesn't matter what I say now. I could say it could go lower and then run higher. Whatever I say, it's not going to happen until it happens, right? So let's move on from crude oil. We have the S&P 500. Still yours. Go for it.
All right, so piggybacking off of the earlier week analysis, we see that the S&P futures has rejected off of a daily breaker, not highlighted here. I removed it because we moved way lower past of that. If you wanted to check out what those levels are, you can look at our previous videos, in which I highlighted it. However, we see that price has been respecting the premium arrays and punching lower into sell side. Big thing to look, I liked about between Wednesday and Friday's trading was that Thursday candle. It traded into the daily buy side imbalance side inefficiency level there, respected it very, very well, and expanded into sell side liquidity 4299 and even lower into Friday's trading. That's about it for the daily. Not too much there. We didn't take out sell side at 4242 yet, but I think early next week that could be a easy target, and we could see retracement into next week. All right. So as you can see, the hallmark of the end of the week was that wick into the daily imbalance level and just pinging right off of that and expanding lower, pushing past the new week opening gap level, not really spending too much time there, which I really liked, and into one sell side liquidity pool for 299.50. I also liked that right before that low at 4299, there was a discount PD array there. No. Way back. Yeah, right there. Price didn't really meander around that and just kept expanding lower. I like that. It shows that the market has a high willingness to move lower. And we see on Friday that price wicks into this 4-hour sell side imbalance level and shoots lower still.
Yeah, I really like how price reacted from this daily busy from this daily busy level here. We see very, very nice expansion going lower, right? A lot cleaner than Forex in my opinion, right? This definitely looks a lot better. And this is a 4-hour chart, not a daily chart. So there's a typo there for you guys. So we do apologize for that. But yeah, it's a 4-hour chart, not a daily chart. So if you guys pull this on your 4-hour chart, you guys should be able to see this exact chart here, just without the annotations. Let's go into your trade of the week. Go for it, Leo.
Yeah, so this is a 1-minute chart on S&P 500 futures. This is Thursday's trading. I picked this trade of the week because of that daily imbalance level highlighted in that blue on the daily. I like to see on the left that price was really respecting that level, running into it, rejecting it, running sell side into lunch, and then retracing back into it into the PM session, kind of sitting around there, picking up orders, and then expanding lower yet again. The reason why I took the trade past 2 and not that first leg down was because I saw that price ran past it, made an imbalance, that purple inversion order block there, and making an imbalance on the 5-minute and respecting the premium level there, as well as just consolidating between that premium and that discount PDA rate marked in black. And right when I saw price take out the small pool of buy side between 2 and 215 right there into that 5-minute imbalance low, I took the trade. And I also took the trade because I was watching Nasdaq at the same time, and Nasdaq ran a lot higher while ES respected the high at around 2. So there was a little SMT there. So I took this with the draw being 4299.50. However, I exited a little early as we were approaching 3 and the bulk of the move already happened. I saw price make a little expansion move higher right before 3, and that kind of spooked me a little bit. I didn't want to sit through a lot of another round of retracement or consolidation at this area. So once it ran back down a little bit, I just closed my trade. I didn't want to deal with too much time on the chart after taking out most of the move. But yeah, that was one of my favorites for this week.
Solid. Yeah, well done. Yeah, I really like what you said at the end, where if you catch most of the move, you don't really want to sit around for a next round of the retracement, especially when it's coming down to 3 o'clock, where it could do some nice retracement for them and then run lower, right? I like how you recognize that, hey, this is enough for me. I'm just, kill the trade here and then move on, look for a next trade here.
Yeah, because the draw on liquidity doesn't mean it's your TP. It doesn't have to be perfect, shoot right past it. That's just a draw on liquidity. It's not your final target at most of the time. So yeah, it already took out an old low too. So realistically, I should have taken a partial and just like we're good for the most part.
Yeah, definitely. Yeah, I want to carry on what you said about the sell-side liquidity. So sell-side liquidity is just a target, is where we are saying, hey, this is where price wants to draw to, right? And I'm pretty sure many of you guys, if you guys have traded or demo traded or even live traded, you guys understand there's times where price will come right next to your DP and start running right away from it, right? And the whole idea behind that is like, okay, there is not that you're wrong, it's that you overstayed your welcome, right? You don't want to be like, oh, the price is going to go here. You're forcing your will in the market at that point, and you don't want to do that, because when you force your will in the market, it's harder. It makes it harder and harder for you to kill your trade, right? So you don't want to, you want to say, hey, if it gets near this level, start taking your partials out. And then if you want to leave a smaller runner to run into this liquidity, you could, right? Make sure your stops at least in profit or break even, at the least, right? But yeah, let's move on from ES, right? We have my final trade of the week, which is NAS, right? So I caught this trade in the beginning of the week where I was like, okay, I'm probably done for the week after this move here, right? I saw price consolidate here, create lows here that I think that this is where it could run into. Realistically, I was targeting these lows down here, right? I'm saying, okay, this is a lot more cleaner than this low here. But I'm in my head, I was saying, okay, if it wants these lows, I want to see if it can really get animated, go down into these lows, into this low here, right? So as you can see, price opens right 830, just massive run higher, right? Trading higher and higher into this H1 inversion, right? Once I saw that this H1 inversion here, I was looking for a sell, which I was able to catch, just a very, very small sell here, probably like 15, 20 handles, and I was able to get out the trade. I was like, okay, you know what? It's not looking too nice for me. I don't want to be stuck in all of this. So I'm just going to chill and just call it a day. Right. We see price chop around, right? Price dropped lower here. And I was like, okay, let's see what they want to do. Because if they really wanted to send this lower, they could, right? But thankfully they didn't. They continue running higher, trading higher here. Right. If you guys paid attention to the beginning of the week where I was saying this is my intermediate term high, I do not want to see price trade above this. If it does trade above this, then I'm incorrect on my bias, and I will sideline, right? Because if price takes out this high, there's a good chance it might continue to run for the next bullish buy stop, right? However, if it did run it and I'm still bearish, I want them to have a very dynamic move away from it, just like a turtle soup. I want to see price run up into it and just very heavily tank lower, right? So when price started closing for us that day and then started trading, just meandering here, just slow movement, I was looking for a run higher into a trade lower, right? So I saw this run higher here, Midnight New York here. Price trades higher, trades right into the higher that inversion fair value gap. You guys can pull that up on your own chart. This is a 15-minute chart. So on the H1, you guys should see this inversion. Trades right into the inversion fair value gaps high, drops lower, trades a little higher, trades up into that area again. Finally, big displacement lower. Price creates a fair value gap there. Price trades up into it. That's my entry here. Bang. Sit through maybe like 2 to 3 handle drawdown, maybe 5 handle plus slippage, whatever. 5 handle drawdown. My stop was at the immediate term high, right? Because I didn't really want to hold this trade and stay awake for it because I wanted to go to sleep and get up again. So I put my stop loss at this intermediate term high, allowing price to say, hey, if I'm wrong, it has to prove that I'm wrong by getting up here, right? Thankfully, it did not get up there. It was even relatively close to getting up there. As soon as I entered, as you can see, it kind of chilled for a little bit, moved around a little bit and then started moving lower for me and then ultimately started tanking as soon as the market opened, which is very, very good. Hit my TP. Usually I would take some partials out when price is running this dynamically, but like I said, I wasn't awake for it, right? So price runs lower. I had this amazing full pull, right? Full pull into this liquidity level down here. After that, I was basically done for the week. I caught a little bit more trades here and there, but it wasn't too crazy for me to want to cover for you guys here. Right. So if you guys had any questions or anything like that, make sure you guys drop it down below. Leo and I will do our best to answer all your questions. Right. And if you guys wanted to talk about, why didn't you guys take this trade or this trade? We'll look at it. We'll look at it. Sometimes we're just not feeling comfortable trading, during this time or during that time or around whatever level that is. Right. So we all have our own preferences. Right. But a lot of times you'll see that we're taking our trades in the correct time. We want to take it after midnight New York. Right, we don't want to overstay our welcome. We want to be able to take some partials out or trade in a very professional way, I would say. Right. Is there anything else you want to add for them, Leo, before I wrap it up?
No, I think we covered everything.
Sounds good. Sounds good. Yeah. So like I said, if you guys have any questions or whatnot, drop it down below. Leo and I will be more than happy to answer some of your questions. Right. And if that's it, then hope you guys had a great week. Hope you guys have a good rest of your trading week for next week, right? And we'll see you in our new video next week. Right, we'll see you guys then. Peace.
Take care, guys.